If I'm the consumer, I want to know what? Is my policy set up for maximum cash value? That's the number one thing. And then second, if it's not, why not? Am I getting an honest review of everything? Or are things not being told? Do I have to pull teeth to get answers? That kind of stuff. Like, no, get that out of my face. So let's get on into it. What we've got here, let's start with the example on the left, actually. There we go. So on the left, 53-year-old individual. What do we see here? 1035 exchange, $560,000. Those are coming over from some VULs, variable universal life policies. This is a 40-60 split with a smaller company. And you can see that because he's pumping in $300,000 per year for 5 years. That's all he wanted to pay. And then 40% of the payment is $120,000. The commission rate with this product is 130%. If you have a calculator, what's 130% of $120,000? Comes out to about $150K. That is the agent compensation on this particular policy. We're going to break it down very thoroughly too at the end of this spreadsheet analysis. But that's the compensation, but put that aside. Let's say you say, I don't care what the compensation is to the agent. They should get paid as long as my value as the consumer is maximized. Here we go. Cumulative payments. This includes what he's paying out of pocket plus the 1035 exchange. What is highlighted in yellow represents his break-even point. Between years 7 and 8. He's paid in a total of $2,060,000. There's his cash value, and this is based off of the non-guaranteed values, the company's present dividend rate. We're going to look at guarantees next. 40-60 split, cash value over time. Okay, let's look at the same company, same product, same out of pocket to the policyholder, but different design. We were able to go down to a 595 split because this is a smaller company. That was as low as I could get it with this individual at age 53. What's 5% of his $300,000 payment? $15,000 per year. That is the base premium at a 130% commission. Is it 150 grand? No, it is not. Significantly less. With the PUAs included, you're a little over $20,000. But look at the consumer value. Right off the bat, you're close to $820,000, whereas over here, you're at $736,000. The far right CV difference is the cash value difference. That represents how much more you have in cash value with this policy, the low commission product with the same company, same product, same dividend assumptions, everything, same MEC limits. Look at the death benefits, they're the same because you have a bigger term rider here. But look at the difference there. Won't MEC. It's a 5-year, 5-pay. Can't MEC in this example based off the guarantees and non-guarantees. But as we scroll down, what do you notice on the difference? By year 3, you've got about $150,000 more. Same company. I know I've said it a million times. Same product. There's your break-even point as well. Dividend values. Now, we can scroll down if you'd like. Why don't we, Abby? To be transparent as possible, because I'd want to see this if this was me. This was a standard non-smoker rating too. By age 80, what do you notice? $570,000 difference in the value. Now, let's look at the exact same thing, but looking at the guaranteed cash values. It's always good to look not just at the best case, look at the worst case scenario too, maybe a middle ground option as well. So exact same policy here. Guarantees, $860 total in, combining the 1035 exchange, which will always boost the values. $713, break even now, between 12 and 13. Over here, same company, same product, but guarantees, $595 blend. Look at that, between years 4 and 5. What's your CV difference in the first year? Almost 100 grand by policy design. And taking that $150,000 commission, it's actually more than that with the 1035 exchange, the PUA payments, the term rider. But this will max out a little over 25K. That's still like sweet, like come on, as an agent off of one policy sale. But that's minimizing it in order to maximize consumer value. This is where people raise their eyebrows and think, okay, why was I not shown this? Even if you prefer this company, this smaller company over here, like what's going on? Now, let's compare this or do a full compensation breakdown. So now we're going to look at one of the major mutual companies, and we will look at the guaranteed values next, as that's always important to compare. But here we go. The major mutual company, well, let's start with the small company. Here's what he was shown. Small company, high commission rate, same 40-60 split, cumulative outlay, these are the dividend values, breaking even between years 7 and 8. Base premium commission at 130% commission rate, $156,000. 156 grand off of one deal. When he wants the consumer, imagine that this is you, maximum cash value. Where people get into trouble with this stuff is where they get into a policy and find this out after the fact. That is the big issue in the industry where people have buyer's remorse. Difficult to get transparency on this, like how deep are we going here? See what I mean? You've got to have someone that can look at this stuff and identify it quickly for you. Over here, 1090 with one of the major mutuals. Look at this. Positive between years 2 and 3 in this example. It's really year 3. Comp rate at the highest level, 85% on the base premium 25.5. Very similar to the small company with that minimum premium design, but still just minimizing everything because we're trying to do what here? Maximize the consumer value. Like if this is me, which one would I want? Aside from commissions. If I could just go on Amazon and this stuff was transparent and easy to understand, I was interested in it because a whole life insurance policy is safe, liquid, tax-free, don't mech it out or anything. All of that good stuff, like which one would I want? It's a no-brainer as I look at this over time. We don't have a CV difference column here, but let's take a look. Year 20, 3.369 compared to the major mutual, year 20, 4.335. Now these values are just pulled directly from the illustrations from the different carriers, different dividend assumptions and such. So that's not always a fair comparison for any company, whether it's major mutual versus major mutual. You know my feeling on illustrations. I like the actual data. That's important. But nothing wrong with looking at the guarantees. So here we go. Exact same thing he was originally proposed. Sent it to us. Here we go. Break even, again, was between years 12 and 13. Based on the guarantees, the compensation is exactly the same on this. So you have the $156,000 compared to the $25,000. And what's important, or what I want to emphasize here, is when it comes to the agent compensation, what do we see? Less comp equates to more consumer value. We just pushed it down as low as we legally could per the IRS limits and also the insurance company limits. Like that's what we do. It's also how banks work with their bank-owned life insurance. It's also how private placement often works. Like wealthy people, when it comes to high cash value life insurance, will seek out low commission products. Break even, just about year 4, 1760, just about 176 minus 3,000 in cash value. What's the CV difference though? Again, that's showing how much more I have with the major mutual carrier compared to the small carrier. Right off the bat, it's $100,000. 100 grand. That's more than some people make in a year. Difference in value there. If I go down here, let's go again to year 20. These are guarantees. Almost $600,000 in the difference. Like it's drastic. Drastic at the end of the day. PUA flexibility exists with both of these companies. A lot of features and benefits to be aware of, but still, as a consumer, if I am looking for a maximum cash value and things do not seem right, I want to be aware of what to look for. And always keep in mind, no matter who you're working with, agent compensation has a direct impact on policy performance. That's going to happen. So I hope you enjoyed this one, or these videos. If you have any questions, please feel free to reach out anytime. Please hit the like button, subscribe for more, and as always, I hope this helps. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.